Hello, we're going to review for the first exam for Business 210 by going over the practice exam. And this will be a long playlist, but I think you'll find it useful. So where to begin? Well, chapters 1 and 2 was a lot about can you name that account and can you say what financial statement it would be on. And you'll remember that there are 4 kinds of assets: current asset, long-term investment, property, plant, and equipment, and intangible asset. There's 2 kinds of liabilities: current liability and long-term liability. There's 2 kinds of shareholders' equity: contributed capital and retained earnings. And when we look at the income statement, we have revenue, cost of goods sold, operating expenses, other revenue and expense, or income tax expense. So those are the different categories. We know that revenue, cost of goods sold, operating expenses, other revenue and expenses, and income tax expense show up on the income statement. We know that retained earnings shows up on the statement of retained earnings, and that the balance sheet is assets, liabilities, and shareholders' equity. So the first one we have is automobile. Automobile is property, plant, and equipment, and because it's an asset account, it will show up on the balance sheet. Accounts payable is a current liability. Those are the current bills that are due in this operating cycle. And because it's a liability, it'll be on the balance sheet. Cash is definitely a current asset, the most liquid of all current assets. Liquid means how fast can you convert it to cash. And because it's an asset, it's on the balance sheet. Sales, returns, and allowances is a contra revenue account. It's when customers who you've previously made sales to return what they've purchased, and so that's a sales return. And anything that's revenue belongs on the income statement. Dividends, or dividends declared, is a retained earnings account, and it is on the statement of retained earnings, because remember, it reduces current profits to determine the profits that are retained in the business. Fares earned is another revenue account, and so is on the income statement. Rent expense is an expense account, specifically an operating expense, so it's on the income statement. Utilities expense is an operating expense, meaning it's part of the day-to-day operations of a business, so it's on the income statement. Supplies is a current asset, and so it's on the balance sheet. And remember, supplies are things that you use and consume internally in the business, like office supplies or maintenance supplies. Supplies are internally used supplies. Retained earnings is a retained earnings account. It is part of stockholders' equity, and it is the one that's on 2 different statements. It's in the statement of retained earnings, and from that statement of retained earnings we compute ending retained earnings, which shows up on the balance sheet. Sales is a revenue account, so it's on the income statement. Delivery expense is an operating expense, so it's on the income statement. Interest expense is one of those other revenue and expense accounts because you're not in the primary business of borrowing money. So thus it's an other activity, so it's an other expense on the income statement. Unearned revenue, also known as deferred revenue or payments received in advance, is a current liability account, so it's on the balance sheet. Cost of goods sold is cost of goods sold, and it's when you sell inventory, it becomes the cost of the goods or the inventory sold, and it's an expense account on the income statement. Depreciation expense is operating expense on the income statement. Whereas accumulated depreciation is a contra property, plant, and equipment because it is the accumulation of all those previous depreciations or usage of our property, plants, and equipment in the past. Trademark is an intangible asset, so it's on the balance sheet. And marketable securities are short-term investments because they're short-term in nature. They're a current asset and they're on the balance sheet. Continuing on, investments held for more than 1 year or a long-term investment is an investment account and it's on the balance sheet. Accounts receivable is a current asset, so it's on the balance sheet. That's where your customers owe you on their accounts. Accrued expenses payable are payables, and so that's a current liability on the balance sheet. Prepaid expenses is a current asset. Those are like prepaid insurance, prepaid rent, where we paid for our expenses before we use them, so they're on the balance sheet. Inventory or merchandise inventory is a current asset, so it's on the balance sheet. Amortization expense is an expense. It's an operating expense, and so it's on the income statement. Remember, we amortize our intangibles, so that's why it's an operating expense. Goodwill is one of those intangible assets, so it's an IA, and since it's an intangible asset, it's on the balance sheet. Bad debt expense is an operating expense, so it's on the income statement, whereas allowance for bad debts is a contra current asset, and what it is, it's an estimate of the customers we think are not going to pay us this year. So since it's a contra current asset, it's on the balance sheet. Common stock is contributed capital, it's on the balance sheet. Paid in capital is contributed capital, it's on the balance sheet. Cost of sales is similar to cost of goods sold, it's just we use cost of sales for a service business, one that does not sell products but only sells services. So it's the cost of sales, like cost of goods sold, is on the income statement. Dividends payable is a current liability. It's when the dividends have been declared but not yet paid, and they'll be paid shortly, thus a current liability on the balance sheet. Income tax expense is income tax expense and has its own special line on the income statement because you have to figure net income before tax in order to compute the amount of the income tax expense. Whereas income taxes payable is the current liability on the balance sheet, which says we owe the IRS or state taxing authorities money. Prepaid rent is a current asset, so it's on the balance sheet. Supplies expense is an operating expense, so it's on the income statement. And finally, notes payable due in more than 1 year is a long-term liability, and so it's on the balance sheet. So I hope this has helped you classify accounts.